Good evening. I hope you're keeping well. Thank you all for joining us for our spaces this evening, Mongo Spaces. The topic for this evening is building financial and business resilience in 2026. If you do any social listening, it's quite clear that 2025 has been a difficult year for most people. And this conversation will basically help us rethink or just look at 2026 and say, what are some of the things that we can do? And what I'm looking forward to in this conversation is also some practical steps from our panelists on what we can do to be more resilient in 2026, whether that's looking at our businesses, perhaps also an outlook of what they expect from the performance of the economy in 2026 and how that will impact us, but also daily annual planning routines that we can adapt as early as possible to ensure that we are more resilient in 2026. This evening, I will be speaking with James Kamau. James is Group Head of Distribution at AAR. And I'll also be speaking with Kirinya Kithinji, Head of Strategy and Growth at Wild International. And before we just get into the questions, James and Kirinya, what are your expectations about our conversation? What are you looking forward to? And perhaps what word do you have for those who are joining us on the spaces? James, let's start with you.
Good evening. Thank you so much for having me, having us. It's a great conversation that we are looking forward to. I'm looking forward to the engagement with the people who have joined us. We are looking forward to a better year than we have had in 2025. So a great deal of interaction. And the things that we are going to discuss here can be able to help us bounce back in 2023. We shall have achieved our objective. Thank you.
Kirinya, let's come to you. What are you expecting in terms of the conversation we're having this evening? What are you looking forward to? And what's your word to those who are joining us on the spaces?
Just looking forward to sharing of learning. 2025 has been a difficult year for many people. So I'd like to bring it to a close on a high, especially for the participant. But again, the year is gone, so we still have next year coming up. So how do you future-proof your coming year? And I think these conversations are really going to help in that respect.
I like the word that you've used, to future-proof 2026. And you're right, whether we're looking at X or Facebook or LinkedIn, the conversation generally for many Kenyans circles around how difficult 2025 has been, although some saying that there was a bit of reprieve, but we'd like to future-proof our 2026. Let's now get into the questions. And before we do that, first, a very big thank you to AAR Insurance for making this conversation possible. So to the AAR team, thank you so much for the opportunity to, of course, host this conversation, but also for sponsoring this particular spaces. So to AAR Insurance and the team, thank you so much. So James, I'll start with you. As people reflect on 2025, and both you and Kirinya have just touched on it, and prepare for 2026, what does business resilience mean to you, especially for Kenyans and Kenyan families and businesses who are facing local challenges, James?
In 2025, we have witnessed a lot of challenges brought about by different circumstances. The economic challenges that families and businesses have endured. We have also experienced some global changes, maybe in government, that have had an impact to the rest of the world. We have had wars continuing or erupting in various places and impacting on things like fuel, which eventually touch on our existence. We have had the technology changes. Some technology changes come at the expense of even jobs or even companies. Some companies, depending on their level of preparedness, there is, of course, increased competition, which can result also in some business models being changed. We also have things like climate change, drought, or flood, which cause families and some businesses to really suffer. But the good news is that we are Kenyans. The Kenyans are in for resilience. The first thing that I would want just to highlight about resilience is just our own ability to come back from some of these situations. We have had a lot of challenges of the country sometimes, and there has always been that ability for us to come back. So just that mental readiness, just that ability to come back is very important. And even just having the faith that all will be, it is just temporary. We continue working towards the solution is very important. The other, of course, is being proactive, saying things can happen. So let me be prepared in a certain manner. That's where things like insurance now come to play in, because you don't buy insurance because you have an issue at the moment. You buy insurance in preparation of what can happen in the future. And at the same time as well, you can put aside some savings in anticipation of things. Nobody really takes things for bad, but the thing can happen. The Kenyans are also becoming very good at side hustles, and it helps. Even just the mental preparation that if you're employed, something can go wrong, but I'll have something to do anyway. That's also part of resilience. I personally have practiced the element of accepting quickly when things change and adapting. You flex yourself according to the way things are. If an income reduces or if a job is lost, accept very quickly and adapt to the situation instead of resisting. You advance. You now start something new. That, and then there's this issue of mental wellness. It's very important for you to continue taking care of yourself. Your mental and emotional strength is extremely important because that balance is what will help you to bounce back to the next opportunity. So I would say that as families and businesses, from the Kenyan context, I think we are more than ready for 2023, using the lessons that we have built in 2025. I feel there's a very good opportunity for us to be able to do well as long as we continue having that very positive mental attitude.
James, you do remind me, and we'd like to say that Kenyans have mastered the art of the bounce back, that we never really get stuck in a terrible situation or in a bad situation. And our resilience game is quite strong, if I can use it that way. So thank you so much for sharing, James, and of course for encouraging us and for reminding us that, yes, there are things we can do. We can take on an insurance, we can save better or more intentionally to future-proof our 2026. So thank you, and I'll come back to you in a moment. Kirina, let's come to you now. How do you define business resilience, specifically when it comes to SMEs and Kenyan SMEs and MSMEs as well? We are hustlers. The spirit of entrepreneurship in Kenya, I think, is one of the most well-known across the continent, but it has been a difficult year for SMEs. What are the top priorities that you think small businesses should focus on or SMEs should focus on as they plan for 2026?
Very interesting questions. Let me start by how I would define resilience. I would define resilience as the ability of a business to keep solving its customers' problems effectively and profitably, even in the face of internal or external disruptions. That's the way I would define resilience. So if you look at this definition, the focus of a business resilience is really on the ability to keep serving clients to their satisfaction and to do so profitably. I think if you score well on this, you're on your way to building resilience for 2026. And now you also asked, what are some of the priorities that SME owners can have as top of mind? I think I have two. The first is to test your assumptions about your capabilities to survive shocks, market shocks, or any other shocks. Now, why I'm insisting that we need to test our assumptions is every business is built on certain assumptions, and especially going forward. History, we know it rained yesterday, it didn't rain yesterday, but you can't tell what's happening tomorrow, what's going to happen tomorrow or January. So there's a bit of assumptions. Looking into the future, of course, you need to work through assumptions. So future proofing is built on assumptions. So number one, I think you need to test the assumptions. The challenge with SMEs, SME owners especially, is that sometimes they don't even know, they're not even aware that they are running their businesses based on assumptions. And I think the upshot is that you might actually be quite surprised how many invalid assumptions SME owners hold about their business or the future of their business, especially around their capabilities. Let me give you 2 or 3 examples where assumptions tend to eat business owners. Number one is invalid assumptions about ability to survive competition. The other one is wrong assumptions about ability to scale. And the third is the assumption about the enduring value of your customer offering or your value proposition. Those are assumptions. Now, what's the second priority? And the second priority, of course, is to identify the most critical of these assumptions and execute effective responses to them. Otherwise, for sure, your wrong assumptions will eat your business up. You've heard somebody say that culture eats strategy for breakfast. But I would say this, that wrong assumptions will not even give culture the opportunity to eat strategy for breakfast, because strategy will have collapsed long before it is eaten for breakfast. So that's what I have to say, Terry.
Wow, thank you so much for sharing that and for challenging SMEs to now rethink, especially when it comes to assumptions. James, at the end of the day, we are individuals. The individuals who plan for our businesses, the individuals who future-proof our 2026. When you look at how individuals plan for a new year, what would you say are some of the most common risks or blind spots that Kenyans tend to overlook? And can you share one concrete example of the same?
Two critical things that we keep promising ourselves to do. One of them is, I'm talking financially, is savings. And the other one is risk management, because it is very important. As individuals, these two elements must be in place so that our financial health improves. What can be between us and the savings, and even in terms of risk management? There are things that we forget to consider. And for families, sometimes we don't consider that things like schools potentially go up. There are things like fare increases, by loans, which are very popular amongst us, airtime, how much I'm spending, because that's quite an area that consumes a lot of our income. And plan for medical needs, which will inevitably come along the way. We don't plan on our children getting sick or ourselves for that matter. And there are always other family obligations that will come. And you are renting a house, things can change. There's always that a possibility of the rent coming up, interest rates if you're paying a mortgage, things can really change. Just like we said in the beginning, and this is my second point, we tend to be very optimistic as Kenyans. So we make really other assumptions, or maybe we don't even consider it too much, but we always think things may get better. We hope for things get better. There are some common phrases like, in 2026, my business is going to pick up, or I'll get more customers in 2026, or even before discussing with the employer or knowing what their position is. People are always hoping for a salary increase. And what they forget is that there's a lot of volatility around business and incomes, that the customer that you rely on so much may experience challenges which you may not have even planned for. And maybe even your side hustle can experience hurdles which you haven't planned. My third point matters health. This is quite serious around Kenyans. We have emerging diseases that are coming up. Could be those cancers and other chronic ailments. And I know many Kenyans can attest to the pain of managing these matters of health. Actually, a very simple outpatient visit can cost even up to 5,000 if you're going to see a specialist. And that's not easy money to fund. There are other factors, of course, but there are many challenges that come along the way in terms of planning for resilience. And that is why I would really encourage us to sit down and make sacrifices that will enable us to do, as individuals, to save a little bit. The no little amount when you save, make a bit of sacrifices that you can be able to invest into risk management. One way of looking at it, for example, if you're buying a medical cover for 20,000, for example, if you divide that to daily units, you'll be able to see that it's not too much in a day. And you can be able now to relate that to the amount, say, you're used for airtime, and see whether it's practical for you to save or to reduce on your online visit and transfer some of those resources to managing risk. Because risk is inevitable. So one of the pitfalls tell you that we as individuals have is not factoring in the risk element as we plan for our big goals. So we are good at planning and wishing for the big goals, but we don't put the underlying risks or even a plan for them. We just hope we're optimistic, but we forget or overlook both these elements, which are very important to plan for.
It's interesting how you frame it in such a way that it's so easy for us to realize that we can actually begin to make the small changes that will eventually make a big difference. And I know that sometimes we say we are one sickness away from your financial stability completely collapsing. And you've mentioned, for instance, a critical illness or just something small that can completely change how the future looks, both from a positive way and from a negative way. And thanks for sharing some of the quick things that we can start doing early. Karina, let's come to you. Still, as we reflect on 2025, and what do you see as some of the vulnerabilities most often with Kenyan SMEs, and how can business leaders address them moving into the new year? We've looked at what an individual can do, but how about how our businesses operate?
From what I see, broadly speaking, the vulnerabilities that I've come across mostly fall into two categories. So the first category is external vulnerabilities, say natural disasters, the policy shifts, Kenyans are aware of that, taxes, even geopolitical events. I think James alluded to that, like war, for instance. Now, these external vulnerabilities tend to affect all businesses to one degree or another. But the problem is that we have very little control of these external vulnerabilities. So I think the best approach is to figure out how to manage the next category of vulnerabilities, and which is internal vulnerabilities. Now think about COVID. That was in 2020-21. Many of us were exposed to COVID, but it tended to hit those with pre-existing conditions a lot harder than those who didn't have pre-existing conditions. So in terms of internal vulnerabilities now, the one that I've observed is SMEs are very exposed and very vulnerable to bad decisions of their owners. And I think it's a given that you can't have a successful business if you're tumbling from one bad decision to the next. And these bad decisions that I'm talking about, they can be on anything. For instance, bad borrowing decisions, like borrowing for the wrong purpose, bad hiring decisions, failure to let go of loss-making customers. All those are bad decisions, and they are made by who? By the business owners themselves. Now, the second category of internal vulnerabilities away from decisions is just the way the business itself is structured, the way the business model is structured. It can make you very vulnerable to external shocks. For instance, if you have a faulty value proposition, or you don't have a clue about which processes to set up or which processes to change, you don't have a clue about the capabilities or the structures required for the delivery of your value proposition, you could end up with a business that takes too long to succeed, even when there's a clear market opportunity. So the thing is, you can see how I'm describing these internal vulnerabilities around the business model and the decisions that the owner makes. You can see they can really amplify the effect of external shocks, whether it's increase in taxes and the rest. You asked what can be done to handle those vulnerabilities. Now, I think in these few days that I left in December might be a good time to test the results that you had planned at the beginning of the year. Why? Because results are a harvest. So for instance, if you set out to make revenues of say 1 million and have only made 100,000, please do not be surprised. Why am I saying that? It means that's exactly what your business was designed to do, to make 100,000, even though you had planned to make 1 million. So of course, you need to ask, which decisions worked and why? Which decisions didn't work and why? And then ask, what is it about my business model that is not working? In other words, focus on fixing your internal vulnerabilities around those two areas, your business model and the kind of decisions that you've been making, so that you can vaccinate. Remember, we went through vaccination in COVID. In other words, you need to vaccinate your business against your bad decisions. Yes, it's true. You need to immunize your business against your tendency to make bad decisions, and also to vaccinate it against external shocks by sorting out whatever is wrong with the business. That's what I can say.
I really like that example. And you're right. Sometimes as business people, we make the complete wrong decisions for our businesses, and our businesses end up suffering because of the decisions that we make. A bit of a painful truth, but thanks for sharing. James, let me come back to you for those managing tight budgets. And as Kenya has just mentioned, for instance, you're looking at making 1 million shillings a month, but you end up making 100,000 shillings. So those will have to manage tight budgets or are managing tight budgets. What are your top 3 practical steps to help Kenyans better protect themselves financially in the coming year?
Tivian mentioned some painful truth, isn't it? And there's no shortcut. The element of sacrifice. I know what we are all going through. We are managing very tight. The incomes are reducing, maybe because of higher taxes. People are earning less and less. The painful truth is that we need to make even more sacrifices for us to be able to find some money to save and to manage our risks. So the first thing that I would recommend for any family or for any business is to put aside a fund that you can go to it in terms of emergency. And I'm not suggesting that you create a fund of 50,000. Here, the most important thing is just change your behavior first. Just accept that it's important for you to have a safety fund or an emergency fund for that matter. So even if it's 20 shillings that you are now able to put aside, or 100 a week or 500 bob, whatever it is that you can afford, the habit is very important for you to start that consistency. Over time, it's going to grow into a big fund. Opportunities will come your way. And because you have a good putting that money aside, you'll be able to grow that fund. You'll also get motivated. You'll appreciate when the need comes that what you are doing was very critically important. And it's important because things will come unplanned. Really, anything can happen. One moment you're fine, and the next moment you're dealing with a crisis. Death is inevitable across, and we are bound to lose those ones we love, and those are our responsibilities. Sicknesses will come. And once you have a fund that you can be able to put aside, and you are cushioned from borrowing at high interest rates, from mobile sources, and also uses the debt cycles. How can we be able to put aside a fund? Fortunately, today, there are many ways that are open to us, and using the same mobile phones, the mobile application, we can lock our savings, and those options are quite a number there, so that you're not tempted to withdraw. I personally, there is one that I use. Let me not mention its name. It helps, and I've seen it very practically helping because we do it as a family, and everyone is able to contribute to the application depending on their incomes. And together, we have a common goal that we are able to address. So there are very many options of locking up emergency funds. The next one is number 2. There are some things we consider little amounts that we spend, probably even just kick out stress or to bring in just a level of relaxation to us. Just look at how much you spend sending money, making payments through mobile money. It's very substantial. We hardly consider that fee accumulating. But if you looked at it, at how much you have spent in a year, you might want these strategies around how you make payment. I know it's very convenient, we leak it, but it's always good to have a number in your mind. If you're spending 10,000 in fees or 20,000, depending on how much you're sending it, very important that you work with it and see how you can be able to reduce it. There are very many things that we pay for. Sometimes we don't really need them. And I'll give you an example. Sometimes people subscribe to ringtones, to motivational quotes. So there are so many things that we pay for. And even data consumption, sometimes we can be able to control it. The fact is, if you reduce the expenditure by about 300, even 1,000 in a month, you're able to direct it to these kitties that you're able to create. It could even be your own to a side hustle. The other is diversification. Relying on one income can be quite risky. I am very encouraged by some friends that I have who are employed, and they have been able to take risks. When somebody has an Uber maybe, and is doing some cross-sell business, or somebody is doing something online deliveries, all those things, because it's important to caution you on some expenditures that would often give you challenges. And when you're considering things like side hustle, you don't need to do what somebody else is doing. You just do what you're gifted at. You might be an insurer like me during the day, and in the evening you are baking cake or you are cleaning something. When we compare ourselves with the first world, we really get challenged because in the first world, we all have relatives who are living out there, and no one has one job. Everyone has 2 or 3 jobs, and the times to relax are really limited. So it's important that we give that extra income so that we are able to create those savings, and we are also able to create those risk management mechanisms so that whenever things come our way, we because the issue is this. Insurance is considered not to be a necessity, but it is a necessity. And it's not always cheap because, again, if you are buying a cheap insurance, the outcome, again, will simply be that. So if you need to buy something moderate that is effective, that will come through for you when you're in need, then you must make few sacrifices. So all I can say, Terry, those things will create a fund, see any financial leaks. I believe that can help you to keep some financial cushioning.
Thank you, James, for those really practical steps that we can take. And I like what you say as a family and building a fund to even just future-proof the family is something that we should take a lot more seriously. And I guess I'm also just thinking the insurance space has also changed quite a bit over the last many years. Initially, payment plans were so difficult, but I feel like the industry has really changed and it's made it so much easier for us as retail customers to actually have an insurance and either pay over time and I guess even the understanding has really changed. So thank you for highlighting that, James. Karen, I'll come to you. Entrepreneurs or business people face a number of pressures. So now looking at the business, there's the pressure to grow, but also there's the pressure to remain stable. Can you share some practical strategies or perhaps some real life examples of how SME can balance their growth goals with financial stability in 2026?
I have two actually that I can think about. Now, the first is to resist the temptation of streaming resources, especially the ones that are meant for acquiring customers. There's a very big temptation because marketing, sales, client acquisition can be an expensive affair. If you're going to grow and also experience financial stability, I think you need to resist that temptation of trimming those resources that are meant for client acquisition. Why? Because you can't grow if more people are not consuming your solutions. Either more people are consuming your solutions or it's the same people consuming more of your solutions. So that's the first. But the next one is to avoid what I call a maintenance mindset. A maintenance mindset is like an exclusive focus on creating stability while ignoring market growth strategies. Now, when you focus solely on internal reorganization or cost savings, those things can actually create an illusion of financial stability. Because in a sense, your bottom line doesn't look too bad. But now, it's also true, of course, that a business with too much financial stability will find it harder to succeed. But here is what I want to say. You need to note that true financial stability is actually driven by top-line growth and bottom-line growth. Why am I saying this, or what's the implication of this really? Is that as an SME, you must continually invest in growing your client base. And how do you do that? Of course, you need to give them great solutions to the problems that they have presented to you. Now, this doesn't mean that you shouldn't question the value of costs or even question how your organization is structured. No, it doesn't mean that. My point is, whenever you see a slowdown in top-line growth, it's actually a telltale sign, and not so much about financial stability, but a need to rethink your growth strategy. So I don't think we should trade off one with the other. And the balance here for me simply means don't trim the resources that are meant for client acquisition. And then secondly, to summarize, just avoid having a maintenance mindset. The financials can look good when your costs are okay, but that doesn't mean that your top line is growing. So in a nutshell, what I would say to summarize is don't trade off stability for growth. You need to have both at the same time.
Well, I really like that because sometimes I think we focus so much on the growth and we ignore the signs. And I'm saying that as an SME or as a small business, you focus so much on, no, we could go here, we could do so much. And we ignore those signs that tell us you need to slow down or you need to cushion at this moment and then focus on growth later. So thank you so much for challenging us on that. James, I'll come back to you. We're seeing rapid urbanization across the country, with devolution, with the counties really coming up, a growing gig economy. We're seeing a lot more remote work than we have seen before. How should we as everyday Kenyans adjust our approach to some of the personal risk? And what would you tell us about some of the opportunities that we can take advantage of within the insurance space as this trend evolves?
I am participating in this forum from my house. Home has a new meaning today. These days, I be working from home. We are doing podcasts from our houses. are changing our outdoor spaces to create various scenarios and which we commercialize. We are using our garages in different ways. We are seeing people creating content, very ordinary Kenyans creating content, things that depend on them. So I want to emphasize on the need to get very possible insurance. You're an asset, first of all. Appreciate yourself, insuring yourself, get a personal accident at the things. In the event that something happens to you unforeseen, with maybe about 643 shillings when you buy a personal accident from AAR, you are able at least to get a minimal medical cover that can get you started in the event of hospitalization or an accident. So start with yourself first, secure yourself. I know this is the festive season, the weekends. We are all going to get our OT into good shape, make sure they have good tires, make sure you have good insurance for the OT. But remember yourself, that car is there because you so insure yourself and the loved ones become your asset number one. Then insure your assets. A lot of young people today are relying on their cameras, on their gadgets, and the importance of taking a home insurance that covers these gadgets is very important. Remember, we are always running at a risk. These days, we don't need to preach too much because the news or television does a lot of speaking for us. We are seeing floods happening, sudden floods. We're seeing the effects of that, homes getting destroyed, and the businesses getting swept away by sudden floods. So it's very critical that we protect ourselves. So as we urbanize and get opportunities around the gig economy, that creative content and what have you, my simple message is this: we are using ourselves as the critical resources. Let us protect ourselves. Let us take the basic insurance. Remember, it's the habit that matters. You can be able to grow from a simple personal accident to a very well designed medical cover as your business grow, but please start from somewhere.
Thank you so much for sharing that and telling us a little bit more about how we can approach these personal risks and how we can insure ourselves. And you've mentioned, for instance, the home insurance, which I don't think we take as seriously enough. And I must say, James, I felt a little bit targeted there because my car is currently getting ready for the Christmas trip. So I personally feel targeted by your statement, but thank you so much for reminding us. Kirina, I'll come to you now. We're seeing a lot of shifting customer needs, not just in Kenya, but across East Africa. How can we as small businesses or SMEs adapt our products, our customer service, or our value propositions to stay competitive and especially relevant in 2026?
To be honest, I think customers' needs don't really change. They tend to be stable over time. What changes really is how they choose to solve those problems. I'll give an example. Like now, quenching your thirst is an ongoing problem for you to solve. To be there tomorrow, the day after. But now how you choose to quench your thirst is you can choose to drink water, you can choose to take a cup of tea or juice or something like that. So if you look at it that way, I think customer needs tend to be stable over time. So the big question I think we need to ask ourselves as business people is, have you understood the needs of the customers? And here, let me just break it down a little bit more. When I say I need an Uber or I need a glass of water, what am I really saying? Well, I'm saying I have this problem to solve. I need to quench my thirst. Please give me a solution. That's exactly what I'm saying. When I say I need a boda, what I'm really saying is I need to move from point A to B. So the point is, have we understood the underlying needs? That's a question for the business owner. Have you understood the needs of your customers? Or are you too focused on the solution? Do you define yourself as a person who sells water? Do you define yourself as a person who quenches thirst? Those are two very different perspectives. Because if you're selling water, what if people decide they're not going to be quenching their thirst using water? They're going to be taking tea instead. So are you clear about your needs? The second one, once you have understood the need, can you meet the need faster, cheaper, or more conveniently than your competitor? And then the third question is, what's preventing you from doing that really? Is it your cost structures? Is it your people? Is it your systems? Is it your processes? That's what I can say, Terian.
We're coming close to the end, but I've got about 4 more questions that I'd like us to cover. So James, I'll quickly come to you. With so many choices available, what would you say are some of the key factors that we should weigh when deciding on the correct type of insurance coverage for our needs in 2026?
When you're considering what kind of insurance to buy and from where, there are a number of considerations you need to make. And the first one, which we have discussed in various ways in this forum, is about price. What level of money do I have with me at the moment, and what insurance is available at that? I want to assure everyone listening here that however much you have, you can be able to find a suitable insurance. I mentioned that the personal accident, which is a very good starting point, and it has its own very nice benefit at a very affordable price. So price is number one, and please understand the benefits that accrue from what you have paid. The second is the reputation of the organization that you're purchasing from. AAR has a strong heritage of medical insurance. So chances are, if you're looking for good medical insurance, you are likely to find it at AAR, because that's what AAR has been doing for the last 40 years. The claims paying ability of any insurance company. Insurance companies are said to pay claims. You pay a premium, the insurance company promises to pay claims when they occur. So it's good for you to do a bit of research on that. And the best way is to maybe visit the providers wherever they are. You can ask the provider you which insurance company or the company that you're considering, are they good? Are they known for paying claims? Or if you sample 5 providers, then you'll be able to get a good picture of that. The other is service. What kind of service levels are you getting? Or how responsive are they? What infrastructure have they laid in terms of services? Do they have a call center, for example? If I needed to call in the middle of the night, what is the process? Is it simple enough when I'm in this space? Whether you're considering a car insurance or medical insurance, that is very important, because you will come into contact with insurance mainly when you are in distress. That for the insurance company is very important. However, again, you are probably using an intermediate. So whether you're using an agent, a broker, or a bank, it's important to also assess their capacity and their availability, their ability, that you're not alone whenever an incident occurs.
Karina, I'll come to you now. Strong networks, partnerships are vital. We keep hearing that, whether it is in our personal lives, your social capital, or your business networks are very important. Please highlight for us ways in which Kenyan SMEs can intentionally leverage a network, corporate ecosystems, financiers, or advisors for resilience in 2026. And perhaps you can share a real example with that.
What I can say is these networks and ecosystems, I agree with you. They supply the potential customers and even the third parties that are critical for the success of our businesses. Now, to keep it short, I just have a couple of questions to help SMEs to figure out. The first question is this: which third parties or customers generate the most value for your business? That's the first question. And then very quickly, the second question is, these useful third parties and key clients, where are they most likely to be found? And are you there? And then the third question to help you figure out which ecosystems and networks you should work with is, what's the best way to reach them? Is it events, for instance? Is it Twitter spaces like the ones that we're having now? And then the fourth question is, when you find them, what are you going to tell them? Are you going to be tongue-tied? You need to prepare yourself to tell them something so that we can convert them to our side, whether they are customers or third parties like banks or trade associations and the rest. That's what I can say at Ariane. I hope that's a good framework.
It is, absolutely. Thank you so much, Kirinya. James, I'll come to you now for the final question. What daily or annual planning routines do you recommend for households who want to boost their preparedness, or individuals who want to boost their preparedness and their resilience in the current unpredictable environment that we're living in?
Our current penetration of insurance stands at about 2.44%. And what that means is that when you put the total premiums that are paid to various insurance companies vis-a-vis our GDP, and you realize that the total premiums for the country vis-a-vis the total outlay of GDP is at 2.44%. So what does that mean? That means that we are simply not protecting ourselves and our assets enough. And what that translates to is that we are always so near disasters. There's a day I visited Mombasa town. Just in the course of this year, after some political clashes in that town. It was extremely sad. So many businesses have been burnt down, and the only thing I could imagine, the setbacks that those business owners were encountering and the subsequent emotional distress that they were going to go through, meaning even more medical bills. And going by that statistic, it shows that we as a community of Kenyans really need to adapt into new ways doing things. We need to save more. We need to take risk management culture very seriously. And like I've explained in the course of this forum, you need not take very expensive measures. So all that I will say is that we need to change our perception and attitude towards risk management. So for every goal that we are putting forward, we ask ourselves, how have we protected, or how are we going to protect it? When we say that we want to become healthier and what have you, it's a good goal, but underlying must be a protection. And yes, insurance can be costly, but you can start with very products that are not important. So the biggest thing for me is just a change of behavior, a very practical one. Just the way we subscribe to various other services, let us also take insurance very seriously, and for that matter, risk management. Now, the availability of insurance today, if you need to purchase AAR insurance products, we are present online. Just visit our website, aar.co.ke, and we have options there of buy online. Personal accident is there in case you need to travel and you need to protect yourself and your assets. It's easy to do that. You walk into a bank. We now have partnerships with almost 20 banks, including the major ones. So it means that if you go into any bank app and look at insurance services and request for AAR insurance, you will find that the brokers are there, agents are there. We are available and we can help you get started. Just get in touch with us and we can help you and handhold you. And one day you'll be that great business that is well cushioned, protected. You'll sleep better knowing you and your assets are very well protected.
Thank you so much, James, for your final thoughts and just reminding us that you are reachable and that you're practically a link away. So thank you so much for sharing that. And I'd like to encourage all of us in the spaces to reach out to AAR to future-proof your 2026 and, of course, the future of your life and your business as well. Karina, I'll come to you as we close. What are 3 concrete actionable steps you would recommend for every SME owner in Kenya to start 2026 from a solid foundation?
The first is to ensure that you meet your client's needs or your customers' needs, and that meeting of your customers' needs remains top of your mind. Because the moment you lose sight of your customers' needs, you begin to focus on other things that will distract you. So that simply means answering the question, how will this action or decision help me to create value for customers? Now that will help you to keep you in check. That's the first one. Make sure customer needs remain top of mind. Now, secondly, is you need to revisit the team, the people, the structures and the systems that you have created to deliver value to your customers. And then ask the question, are they robust or will they fail you when you need them the most? And then the third thing to summarize is to find a few metrics. You can't run a business without metrics. Find a few metrics to focus on as a means for tracking both financial success and also non-financial success. Non-financial means something like, for instance, are your customers happy? Financial means, are we profitable? As an example, you can't run a business without metrics. So find a few metrics to focus on as a means of tracking both your financial and non-financial success. When you notice something is out of joint as you're tracking your metrics, please don't take too long to course correct. That's what I can say. Thank you, Talian.
Don't take too long to course correct. So thank you so much, Karina, for those gems that you've shared with us, and to James as well. Thank you all so much. We've come to the end of our conversation tonight. This has been Mwango Spaces with the topic Building Financial and Business Resilience in 2026. And what an interesting conversation this has been, just around how can we future-proof our 2026 for us as individuals, for us as players in the gig economy, for us as small businesses, etc. And I think the takeout for me is all the practical advice that we can all start immediately. Paying more attention to our businesses, recognizing when the signals have been sent out, not ignoring that, and also just protecting ourselves better, saving a little bit more, seeking out insurance solutions that will help us future-proof ourselves and our families and our businesses and so much more. So thank you all so much. As usual, thank you so much to Mwango Spaces for keeping these conversations going. And thank you as well to AAR for making this conversation possible. And I would like to thank our panelists, James Kamau, Group Head of Distribution at AAR Insurance, and Kirinya Kithinji, Head of Strategy and Growth at Wild International. Always such a pleasure to moderate this spaces. My name is Terian Chebet. Have a good night, and we'll see you again at the next Mwango Spaces.